Hey guys, today's August the 28th of 2014. I want to go over the euro, and this is more like an educational video. This is more, kind of showing you the do's and the do nots in regards to forecasting. So I'm going to give you little tips. Maybe this will help you in the future if you ever come, across these situations trading. So the first thing I want to show you, this is a time series using the Lucas time series from the pivot low of July 24th of 2012. And you can see that, when you get closer, you're coming into Lucas time series of 521, which is right here. The 30th and then the 31. So, any trader that's forecasting and looking, you can see that there was a pivot change there. There was a nice top you caught and shorted. You missed that one. This was just chop. That was a fail, nothing there. You it was too early here. So, there's some that will work out and some that won't. So the best thing to do is, when you come into a situation like that, I'm going to go into another chart so like that we could break it down. You do this. So let's say this is the day, and then the next day, you wait for the next day to come on and have a fail new low. Because if you take this low and push lower, then it could either be two things. It could be a bear trap and then shoot up, or it's just going to continue lower, like you've seen in the other charts. That it just if you shorted here, you were just in this chop and then got squeezed out. If you went long here, you got chopped out and got stopped because the low was here. The same thing. So you pretty much want to wait for a fail new low. So come the next day, you have a fail new low, and you got buying pressure coming up. That's when you would buy on the next candle day, on the third day. You go, at the open or whatever, buy and put your stop down here. Now you always have to put a stop. Always have to put a stop. I don't care what you do, you always have to put a stop. Because if you're wrong, you want to be out right away. So let's say I bought it right at the open on the next candle day, and I said I think it's gonna go up. I think this Fibonacci Lucas time series is gonna work out, and this is gonna be a bottom. So you put all your stops under there, and then you see what happens. You kind of have an inside day right there on the next day on the August 4th. Boom. Head fake, spike down, you got out. Got stopped out. That's it. Got stopped out. Now another thing could happen is that it was a spike down, you got stopped out, and now it's gonna turn right back up. And that happens a lot. They just got your stop and they just shot up right up. You could get right up, you could get on in again if it takes out that top. This pivot high. If it shoots and it takes it out, get in and put your low over here. Your stop down there at this candle. It's gonna take a while. If it's gonna be going high, it's gonna have to retrace pretty huge to get your stop once it got momentum to the upside. So you got stopped out. I did this trade and I put my stop not below here because I was thinking August 6th, which would be coming up, will be another possible pivot low. And you see, look, even if you think, which I took a big risk. But I was thinking this was going to be a low just because of time and price calculations. So I had a wider stop. So August 6th came in right here. It pushed even lower. Got some more stops just because a lot of people were seeing this time Lucas thing. And it popped right up. Then like I did, put my stop under here. If you follow technicals or time series, price and time, but just stop right there. Nice little bullish action there, very strong bullish action. My stops is right here below this low. This one's trailing it a little bit. Inside day, don't know where they want to go. They want to go higher or not. Almost got my stop. This is right below. And then bulls came in right here, so it's kind of undecided, just back and forth. Retail traders, same thing, back and forth, pretty light volume. almost kind of building a wedge. And this is where you don't want to be. You know, it just happens that I was just caught in this mix. I was thinking this was going to shoot higher. And then again, got a bullish candle higher, but building a nice little wedge here. You really want to be is when it's building all this and it takes out this level and it shoots up, that's when you want to get in. Not in this kind of mess of chop zone. Really tight. You can see the wedge. If I was to draw it right there, nice little wedge building up. So it's either going to go up or down. And if you're long, your stop is right here. It's going to go down. It's going to take you out, and then you write it back. You write it down because you're forecasting right here. It's not happening. Look, it was a good bet, you know, that it was going to go higher or that it was going to change the trend right here using the time series, but it didn't work out. And sometimes forecasting things don't work out. So you gotta have a plan B to readjust. So you're expecting, fingers crossed, boom, got me out. They got me out right there. Got you out too, because it's not happening. It didn't happen there, and if it didn't happen there, the first one, you probably just would have waited to this thing and then maybe gone in when this pressure came in, this sell candle. And I had my stop here, so it pushed lower. I jumped on it, and look, it kept going lower. So you have to be quick to see this, that it's not happening. That it's going to go lower. You just jump on the next open candle, and look, it just shot down. Those are the little things, you know. Look at that. If you're using a percentage level, you got stopped out too. And it shot all the way down here. So those are the little things in regards to forecasting that you need to be aware of, and you need to have stops, and you need to have a plan B when it doesn't go your way. And your stops need to be close, because you're either right or you're right out. That's pretty much it. You're either right or you're right out. Hope this helps.